Good morning, John Hutchinson with Traders Reserve. Welcome to the Breakfast Club, Thursday, February 26th. Few big things to cover today. Number one, Nvidia's earnings out last night. We'll talk about that and the impact. Also, how the ripple effect of Nvidia's earnings can impact many of the stocks that we're holding in the AI2 portfolio. And I'm also going to talk about IonQ, a stock in the quantum space. The company also reported earnings yesterday. So we will talk about that and then get everybody off to their trading day for Thursday. Let's get underway. Pre-market is dead quiet. Stock's not moving very much here in the early going. Not surprised, given some of the moves higher, which have taken place over the last couple of days. So maybe a day of digestion. Really, the only major news, as far as I'm concerned, would be weekly jobless claims, which would have been out about 30 minutes ago, and whether they would have risen. They were a little bit under expectation. But still at historic lows. So the overall no higher, no fire trend remains intact. I have multiple slides on Nvidia, so I will hold for that. But they beat, and ultimately that is really what matters. But as I stressed yesterday, I did not expect a significant move higher in Nvidia. That is turning out to be accurate. Nvidia was up just a little bit under 1% pre-market. Yesterday, it was actually down at one point. Not a surprise. And I'll show you why it's not a surprise, because it matters. But first and foremost, let's talk about the Holy Trinity. That is the three key metrics from earnings reports, especially in the AI sector, or the AI segment of the economy, and that is beating on revenue, beating on earnings, and raising forward guidance. That is the Holy Trinity. The Nvidia did all three. They beat on revenue by a substantial amount, beat on earnings by a reasonable amount, not an amount that made Wall Street happy, apparently, but Wall Street's never happy, so let's just be honest about that. And they raised guidance. They raised forward guidance by 15% for what will be their first quarter 2026 calendar fiscal year. Excuse me. All of the key metrics were good. There's nothing dangerous here, I guess, is one way to put it. But the one thing that I was a little concerned about, and it's a small thing, was the defensiveness of the CEO, Jensen Huang, on the earnings call. And I hope that they will step back from that. They spent a fair amount of time on the earnings call trying to defend all of the inter-technology company deals that are taking place, defending the growth trajectory of their chips. And my takeaway on that is that there is a heavy cloud of doubt by some, not all, Wall Street analysts that Nvidia and other tech companies can't sustain their growth paths. And on one hand, that's always going to be true, especially in semiconductors, as we talked about over the last couple of days between SEMO and Micron. Semiconductors are cyclical. So there will be cycles. But AI is creating something a little bit different, in my view, which is a rapid and necessary expansion in chip and computing power that changes what used to be the cycles of chip expansion or chip growth. But I don't know that right now it is forecastable or can be projected. But I think that's where some of this defensiveness by both the CEO, the CFO, one of their chip people on the call, that led to that. So ultimately, they're beating earnings, At the end of the day, that's what matters. The stock is still range bound between the 175 and 200 level. Nothing significant happening there. The Grace Blackwell chip, they call it now the king of inference, but it will be replaced soon by the Vera Rubin chip stack. Nvidia names their chips after famous scientists, mathematicians. Actually, Vera Rubin, I believe, was an astronomer. Grace Blackwell was a mathematician. So they have interesting names for their chips, unlike everybody else in the chip industry that just names their chips with like numbers and letters, as if it's a BMW. They have, at least they have some creativeness in the naming of their chips, but ultimately they have significant forward expectations and commitments into all the way into uh, the calendar year 2027. That means demand is still rising. Demand is still uh, being priced out into the future. So as far as it relates to their earnings and their projectable growth, uh, there's nothing changing to the negative. But as I showed you yesterday, the market tends to yawn when Nvidia reports now. That didn't used to be the case. 2 years ago, when Nvidia would report, the market would rise by 1-2% on a day, but not in the last couple of years. Much smaller, much more muted responses. And again, I think some of that is related to doubts that Wall Street still harbors around artificial intelligence and around the circular money problem. And I'll briefly cover this, but I mentioned it just a moment ago. This is the ongoing deal structures being placed between almost all of the major companies involved in the foundation or the core of AI infrastructure. So Nvidia, Meta, Microsoft, to a degree, Google, AMD, Meta, just with their Meta announcement just the other day. This is where Wall Street seems to have their largest concerns, that these deals are creating false demand. Um, and so instead of companies paying for something, right, like you would go to the store and buy eggs, it's almost like horse trading, right? You're getting eggs, but you're giving up chickens. I'm not necessarily the best analogy, but as simple as I can make it. So my take, though, is still that this demand is real because we're still at the leading edge of discovery, what AI really can do. And as that discovery, or as those discoveries are made, the Claude Cowork is a great example. Nobody knew that Claude Cowork could effectively replace software as a service, legal drafts and briefs. It's replacing things in medical and medical technology. More and more doctors are learning how to use artificial intelligence in a number of different ways. So the demand is real. How it's being used, how it is adopted, how artificial intelligence is adopted is still where the questions remain and the discoveries are still to be had. So, all in all, I'm happy with what NVIDIA reported yesterday. I'd like to see them be more excited, not as defensive. We'll leave it there. Price projection wise, given their earnings and their forward earnings expectations, the AI2 index is now modeling out price growth for Nvidia over the next 1 to 2 years. I'll take the base case, go right in the middle here, somewhere between 236 and 305. That would be potential returns between 20 and 50% from current pricing. But the big number is still, to me, this one right here up in the top right, 25 times forward earnings for a major chip supplier that is at the foundation of everything that's artificial intelligence. If that's not cheap, I don't know what is. But a 2-year forward PE of 25 times forward earnings is low. especially when you consider there are other companies out there trading at 70 times, 100 times, even 200 times forward PE ratios. This is becoming a feature, not a bug in the semiconductor industry, where many of these companies are trading at very low forward price to earnings ratios. I showed you Micron yesterday trading at 8 times forward earnings. I showed you Silicon Motion, SEMO, trading at 19 times forward earnings. AMD is trading at about 10 times forward earnings. So there is very low forward valuation taking place, which I think continues to show that Wall Street and Wall Street analysts are harboring significant doubts about the growth in the semiconductor, the chip, the memory, and storage, even though all of these sectors, all of the companies in these sectors keep beating earnings, beating revenue, and raising forward guidance and hitting the holy trinity. So with that, I want to take a look at one other fun area of note today. That's called the ripple effect. Now, as I said here a moment ago, the market doesn't necessarily explode higher just because Nvidia beats earnings. But over the next 30 to 90 days, what I do anticipate is many of the companies that we're holding in the AI2 portfolio benefiting from Nvidia's earnings beat, because it continues to support the supply chain narrative, which is, as more data centers are constructed, as more Nvidia chips are put to use, then the pieces and parts that bring all of that together and bring AI to the world have higher demand. And that is, again, why I've positioned the portfolio in the way that I have. And some of the key beneficiaries, Micron on the memory and storage side. Again, Micron's forward sales already sold out through 2026. So they're already taking commitments into 2027. And as I mentioned yesterday, expanding capacity, building new fabrication plants so that they can increase capacity and meet the demand that is rising. Every Nvidia chip requires a Micron or other memory supplier. It's also why SanDisk has exploded because of NAND or flash memory. Silicon Motion is in the NAND flash area. You see how these relationships start to build upon one another, but the ripple effect here are companies that have direct benefits from the earnings beat that Nvidia just put out. So Micron, number one, Lam Research, as they continue to build out new fabrication plants. Lam Research is one of the leaders in their space. KLIC is a new company. It's a new company to the index, to the portfolio, but they have packaging capabilities that are in demand. There are a couple of other companies that I don't have in the index, which will see rising demand as well. That's ACM Research and Ultra Clean Holdings, stock symbols ACMR and UCTT. If you look at stock charts on those, both of those stocks have risen dramatically this year alone. Tower Semiconductor, a specialty foundry company for supporting chips, another company that has the potential to be a direct beneficiary. We don't have the results or the returns yet, but that's why I stress that over the forward 30 to 90 days, I would expect to see more of these four companies generate benefits forward in their price action. Overall, some of the other companies, Coherent, Ciena, because of optical necessities for optical networking, that's the speed and scale of artificial intelligence. The worst thing for artificial intelligence is slow. So anything that moves things at faster speeds is critical to the expansion of data center capabilities and artificial intelligence capabilities, and for the computing power overall. So AMD, there is a secondary beneficiary in part because they are a competitor to Nvidia. But their recent dual sourcing deal announced with Meta shows that there is space for both companies. So AMD really has an opportunity here to prove themselves as a major number two supplier in the chip realm, especially behind their Helios rack, which is due out in second quarter this year. I believe it's second quarter this year. Uh, Ultimately, I see our portfolio benefiting, but I think it's not going to happen on day one. I think it'll take a few days, a few weeks. Some of these companies will have to report earnings to show the impact of that ripple effect. And earlier this week, I shared with you a new segment for artificial intelligence called AI Frontier. And this makes the fifth segment inside of the AI2 index, alongside the AI core, AI supply chain, AI powered industries, and AI solutions. We now have AI Frontier, which is really focused on the future of artificial intelligence. One of the companies in this sector is IonQ, stock symbol IONQ. They're a streaky company, have been. I've shown a chart previously. The stock is prone to big run-ups, big sell-offs. But yesterday they reported earnings. They reported a strong earnings beat, and beat earnings, beat revenue, raised forward guidance, another holy trinity. And they are still pre-profitable, and based on their forward earnings projection right now, not expected to reach profitability until beyond 2029. So this is why I stress the frontier is the future. These are not companies that are necessarily going to be printing Nvidia-like numbers in the next 12 months. But the path to profitability is accelerating for some companies in this space, like IonQ. And they have announced a number of advancements in quantum computing. They are the first public quantum computing company to exceed $100 million in revenue. That is a milestone. Now, when they get to $1 billion in revenue, that's, I think, when Wall Street will really get excited. But if they can start moving that 100 million from 100 to 200 to 500, that's the growth path. And being able to pick these companies up while they're still sub $100, sub $50, is I mean, that's like every investor's dream, right? The stock, you buy the stock at 50, it goes to 500 or 5,000 or whatever. But these are companies that we want to start paying attention to. Doesn't mean we want to jump in and start buying shares immediately. On the chart, IonQ is, we'll take a look at it here in just a second as soon as I bring that up. They're trading below almost every major moving average. Let's switch over and we'll take a quick look at that, just so you can see what I'm talking about. On the daily chart, you can see the streaky nature. Let's go to the big chart. Right, you can see big jump up, sell off, big jump up, sell off, sells off, big jump up, sells off. Right, it's a repeatable pattern taking place. Stock right now really in a range, $30 to $40. But this is the area that I'm talking about on the the hard right edge. Right, you see strong sell-off down to 30. Really a strong support right there. It seems like a defensible line at $30 a share. Gapping up today, post-earnings, 15%. But below the 200-day moving average here, below the 50-day moving average here. Here's your 20 and 10s. The 10 is just starting to tick up because of the last 2 days in price action. But for my purposes, I generally wait until the stock is trading back above its 50-day moving average. It isn't that far off. The E50 EMA right now is sitting at about $41 a share. It's within $3 of that, which is almost another 8% move higher. And you can see real congestion at around 50. So for people who are more willing to take a small gamble on a stock, I mean, this might be a $10 move here from 40 up to this congestion area at 50. That's a 25% return. That's a strong return for a short-term trade. I would not necessarily stress that right now is the time to buy and own this long-term, because I would want to see more than 1 quarter of outperformance. or more than one fiscal year. If the quarters begin to stack up with rising numbers for IonQ, that would tell me that the $100 million revenue wasn't an outlier. It wasn't, one company put money in. It was a real trend. So, but there's a little trade idea for somebody willing to take a shot, buy above the 50, trade it up to buy above the 50 EMA, trade it up to around $50 a share and make a decision, either take profits or hold. Obviously would be your choices. So there's the little brief on IonQ. Let me get the drawing tool out of the way. We'll just take a quick look at Nvidia, see if they're still holding small gain pre-market. Yep, down to 0.3%. So again, that 200 line is still acting as significant resistance, even though over the last several trading days, nice little uptrend developing. But you can see that Wall Street doesn't really like the earnings number for some reason for Nvidia today. And so while the stock is up over yesterday's close, it has not been holding any gains post earnings. Go back to finish off our Breakfast Club details here. Overall, we're still doing exceptionally well on our AI2 portfolio. We added 4 new positions in SEMO, Silicon Motion, Amprius, ASE Technology, and CoreWeave. CoreWeave reports earnings today after the market close. So fingers crossed, may or may not be a bumpy ride. We'll see how that turns out. Overall, 11 out of 16 positions are positive. ASX barely positive, even Broadcom barely positive, and flipping between plus and minus there. But all of these positions, except for Micron and AMD, are either 1 day or 8 days, 9 days old. So plenty of time for these to work out. Nvidia, as I said, didn't just beat; they accelerated, increasing their forward quarterly earnings by 15%. Is not a small increase. We have a stronger fundamental background or backdrop against our AI2 portfolio today than we did yesterday. And IonQ shows you that the new AI frontier segment is worth mining for potential ideas. As I said yesterday, out of the companies in that segment, 12 of them are profitable, 27 of them are pre-profitable, like IonQ. So there is absolutely growth potential in that segment, and it's a segment that we'll be exploring, no pun intended, in coming weeks. So we'll be back tomorrow with a weekend review, weekend positioning, what to watch for over the weekend. A reminder that the AI Wealth Conference is coming up this March 20th and 21st. And finally, for AI2 Insiders, I will see you on Monday at 4 p.m. We'll do a deep dive on the AI2 index and take a look at any portfolio adjustments we may or may not need to make, and then get you on with the rest of the trading week next week. So let's get to work. Enjoy your trading sessions, or you should have live trading sessions today. And hope everyone has a great day.